All right. Hi, everybody. Thank you very much for joining us for this this panel about the future of assets. It's great to be here. Thank you very much, Curtis, for the organization. I know it's a lot of hard work and it's probably very late on your side. So let's just jump into this fascinating topic. It's actually one of my favorite topics right now in the crypto space. I can see you smiling, Sean, already. Um, all right. So, I mean, first of all, I mean, just a few words of intro. Why do we need to speak about the future of assets? Some people might say that it's just another buzzword that we know. The crypto world, in its glorious madness, is so used to generate every other day. I mean, there are obviously tangible assets that exist in the physical world. Examples of that are real estate, commodities, art, etc. But I mean, it's been a discussion in the industry for many years now. We know real world assets are a significant composition of the global financial value. Just two numbers. The value of global real estate was around $320 trillion in 2020. World market capitalization is around 12.3 trillion dollars. So why would assets need a future? After all, this industry has been operating in the exact same way for decades. Why do we need a change? Is there something that needs to be fixed? Is there something broken? Well, if you think about absence of liquidity, impossibility of fractional ownership, non-accessibility to the general public, general non-investability into these assets for the general public, I mean, it's pretty obvious that tokenization of assets has a lot of potential to solve real-world problems. So one could see the possibility to bring more real-world tangible assets on chain, not just as a unique disruptive opportunity, but also as one of the solutions to crypto volatility. And it's also that's the way I see it personally. It's a step toward maturity of the entire industry, and one that will finally convince institutions, private investors, traditional funds, family offices. We are actually in my company, Palmela Family Office is actually one of them, to and also retail investors to give it a try and convince the skeptic in the world that crypto is much more than what they think it is. So this is pretty much what we are going to talk about during this panel, and I'm very glad to be joined by four panelists, each of them having his unique perspective and opinion on this. So welcome to Aditya Saraf. You are an investment associate at Spartan Group. Thank you for joining us. Thank you, Sean Odin, Chief Operating Officer at Flemint. Thank you, Young Kim, Senior Advisor at Tembusu Partners. And thank you, Garlam Wan, Managing Partner at Momentum 6. I am myself, Jean-Luc Gustave, Director of Client Solutions at Palmela Family Office, a multi-jurisdictional family office services provider specializing into alternative assets, impact, next generation, and entrepreneurial wealth. My first question to you guys, just to kickstart the conversation, will be to each of you. Why is that topic important for you in your personal business capacity? Maybe Aditya, maybe we can start with you. Just a short introduction on why that topic is so important for you. Why are you interested into the future of assets?
Sure. Yeah. Thanks a lot, Jean-Luc. So just to give everyone, a brief idea about what Spartan exactly does, we're an asset management and advisory shop. So we manage different funds, digital asset funds, like two venture funds and a hedge fund. And why the future of assets or real world assets would be important for us is, as an asset manager, we see a lot of demand from LPs that seek exposure to these new asset classes. They kind of have an understanding of the opportunity that real world assets presents, but they don't exactly know, how to participate in the upside, which is something they are seeking. So to be true to our LPs, we have to do like a thorough analysis of the space and see how best they can get exposure. That's one of the key things. And on the other side, which is our advisory business, there are projects currently that do not have blockchain expertise, but also see the opportunity within the space. And we have to kind of advise them how best they can integrate blockchain and fall under this new narrative that is reshaping assets. So yeah, for both our business arms, it's a really key topic for us.
Cool, really great. Sean, what do you have to say about that?
Very similar. We're not. I mean, although I have a TradFi background personally, the company is actually positioned Fleemint as a Web 2.3 consultancy for existing businesses. And what we talk to them about is how they can tokenize their assets and how they can bring them on chain. I think there's a slight misnomer when we talk about real world assets. They're all assets. It's just some are on chain and some are not. So I think OCA is actually a kind of better definition. And one of the briefest things is that nobody is going to escape this because it's just modernization. It's just the evolution of the sector. One of the things I liked here, and I use this at the Global Family Office Summit, if you think about it, we used to fax documents to each other. And that's still electronic transmission of a piece of paper that has a signature on it. Now we have DocuSign and various, cryptographically ensured that they are safe, nevertheless requires a counterparty to sit in the middle and ensure that those two things are correct. The blockchain is simply the next evolution of that. You don't need that individual in the middle, because once it's signed and it's on there, it's a ledger, it's immutable, it cannot be forged. And it's cryptographically secure. So really, all the blockchain is just a massive, extremely secure, unforgeable ledger. And provided you're providing the proof of ownership in order to qualify something to be on that ledger, it's not really hugely different from what all of you do every day, except for you're no longer pushing reams of paper backwards and forwards for your admin. And it's going to be the way that everybody does it.
Sure. I mean, I really agree with that. Maybe because we have been in this industry for quite a while, we tend to forget how revolutionary that point is. But the capacity, when you think about it conceptually, the capacity to trade, to contract with someone without necessarily trust the person, because you trust the ledger in its fundamentals, its immutability. That is a very important and revolutionary attribute of this technology. I totally agree. Jan?
Yes, actually, to further to your observation, there's a tremendous demand for alternative assets, including real estate, art, commodities, investing in venture capital. But these asset classes require a very expensive due diligence, specialist due diligence, specialist maintenance. And just like you mentioned, Jean-Luc, that it's very expensive to get in and very expensive to maintain. And the possibility that the tokenization offers of not having to know the intermediaries, just as you mentioned, to be able to trust in the token and the integrity of the token to get in and out of these asset classes, I think offers a tremendous not only democratization but efficiency and global access potential. And I think that's what makes this attractive for the future.
Yeah, I agree. Galam, talk to us about that. If you can hear us. Hey, Galam. Okay, maybe he will join us later. Galam, let us know. Let us know if you can join when you can. All right. So let's speak about the first question. I mean, tokenization and digital assets. How is tokenization reshaping traditional asset classes and investment opportunities? I mean, obviously, when I ask that kind of questions, what comes to my mind is, the potential that this is creating in the market for investors, including retail, to access capital in a cost-effective manner, benefiting from lower barriers of entry, new ways to raise capital. That's number one. Number two would be improving the efficiency of capital flow because of exactly what we were saying earlier, instant settlement, 24-hour trading, reduction of operational costs, etc. And obviously, retail investors who could finally theoretically invest in financial products across borders, or collectively invest in a property or a piece of art, etc. So that's kind of the three way I would answer that questions. But that's my point of view, and I believe each of those points is debatable, because we all know it's not that simple. Aditya, what's your opinion about that, about the way tokenization can reshape traditional asset classes and investment opportunities?
Right. Yeah. So, just to add to some of the interesting points you already made, like for me personally, tokenization is a way of putting a digital wrapper on existing assets, be it, real estate, commodities, luxury goods, or whatever. And the tokenized version represents like a unit of value that can be transferred freely over the internet. So I see tokenization as like the globalization of finance, and this has huge implications, as you already mentioned. Assets can be refinanced, increasing their capital efficiency. There exists infrastructure to allow counterparties to interact without really trusting each other, or without even interacting with any intermediary. So that reduces a lot of the costs and overhead out there. But another aspect I'm really excited about, right, when it comes to tokenization, is that you can have tokenization of certain intangible concepts as well, that will probably drive new kinds of behaviors and interactions. For instance, the brand value of, say, an artist, or the IP of some form of media. All of that can be tokenized and brought on chain as well. The advantages of real world assets apply to these as well. So yeah, I think that's a really interesting aspect too.
Okay. All right, Sean, have we seen this happening already in reality? Because again, we have been discussing those things for years now, but sometimes what we see is that when it comes to actually applying those principles, those revolutionary principles in real world, we kind of face or hit the reality wall, I would say. So sometimes it's not that easy, or it might not even possible, or it might be possible, but at a significantly higher cost than the traditional way. What do you think of that?
Oh, well, I fundamentally disagree with it. It's more expensive. I mean, Finoa and Cashlink just did a report for AVAX, and it's between 35 and 65% cost reductions just in the paperwork by moving into crypto. And this is for security tokens. So we're not talking about anything super revolutionary, just putting things on chain. If you then look at, for example, the solutions that we're looking at for real estate at Fleamint, it's very difficult when you're looking at multiple jurisdictions. And obviously, land registries are not all digitized yet. So there's only so far in the transaction that you can carry out online or on chain. Yeah. Having said that, we're able to provide people up to 3 months kind of time saving compared to the normal foreign investment in property in Indonesia. And that's because we go through the process of doing all of that complicated due diligence in advance. So normally what would happen in property investment, if somebody's building a hotel or a resort in Indonesia, where I'm based, They would then source the land. Then there's a very long, protracted due diligence process. You have to set up an international investment vehicle. You have to invest a minimum of $1 million Australian dollars ish. There were $1 billion IDR. There is a complex procedure to this. Moving all of that into a package that already has all of those facilities set up, you save yourself 3 months, and then you move to the parts where you do have to be seen by a notary republic in person, or at least have somebody with a power of attorney there physically, because the country hasn't moved up to that level with its digitization. Having said that, they are already working on the digitization. They are planning to have all of the land registry on blockchain within the next 15 years. It might take longer. Things often do take longer here, but that's a goal already stated and put into motion. And this is Indonesia, very much a cusp of a G5 nation, going to be expanding, second world into first, huge population. Excuse me. So, we have to remember as well that the locales, the geo-locales of the world that adopt these technologies may not be where we see today everything happening. So it might not be America first. It might not be China first. It may well be India. It may well be the BRICS nations. It may well be Indonesia that are actually coming to the forefront. And this may well be one of the things that springboards these nations into the G5 status, into those economic powerhouse statuses. Because blockchain isn't just about investment products. Blockchain can actually be utilized to democratize education, to increase education. 68% of the population of Indonesia is unbanked, yet it's a 300 million population near us. There is a lot of things that can happen here, and even India, which will actually sort of mobilize populations into finance. When you couple with that with democratized access to other financial products, you may see yourself, and I might be getting ahead in questions, but you might see yourself where there is a chappie, for example, one of our client companies is based in Kenya. They're now going global doing fantasy football. But the same people who have access to the platform from that are then going to be potentially seeing adverts and opportunities where, I could put some of my Kenyan pounds or Kenyan shillings into a property in Mayfair in London. They would never have exposure or access to that. So you're talking about a very diverse liquidity pool. It is already happening. The problems, which is leading to a different question, is the lack of clean regulatory frameworks. And this is what nations are slowly catching up to. And I do believe they could have caught up to it a long time ago. They just chose to keep things in place while the incumbents get up to speed. And that's always going to be the way. You're going to have your early adopter stream, the kind of guys who are willing to go and prospect in the Wild West, which, let's face it, crypto has been the Wild West historically. But there are more and more people like Aditya and Yong and Garlam and yourself and me who are here face to face with the public, fully doxed, business track record, finance track record, understand regulatory frameworks, understand the value of KYC, so on and so forth, that are in the crypto space. And we're not going to do the Wild West stuff. We all want to do it properly.
Absolutely. I mean, I can only resonate to that. I mean, here in Hong Kong, for example, we are in touch with, or even not just in touch. Actually, we are in quite advanced discussions with some really prominent families in Hong Kong, operating century-old businesses. Traditional businesses, and we are those people are very much interested into getting into Web3, understanding what tokenization can do for them, how that can actually change the way they do business while still respecting their values and their legacy. And again, as you say, obviously, by doing things properly and in the utmost compliant way. So yeah, this is to me, this is a unstoppable evolution. How long it will take, nobody knows, but there is definitely something happening there. Yong, would you like to say something about this?
Yes, I also come from, and I have one foot in traditional finance, and but if I had it my way, I would have everything from real estate to venture capital to hedge funds to commodities, everything tokenized. You know,
100% agree.
anything that has an investable, an
Value?
investable potential
Yeah.
value. I would love to have it in a tokenized form. For the efficiency, for the accessibility, for the portability, transparency, and because as I was mentioning earlier, in my shop, we do everything from venture capital to commodities, and particularly in areas like venture capital and commodities, it's still labor intensive, human centric, investment activity. We still do not have an app that can do venture capital.
Yeah,
So
absolutely.
that's my view. Yeah.
100% agree with you there. I couldn't agree with you more. Actually, we're working at our venture arm is a VC app, but it's for crowdfunded sources. But yeah, we are working on exactly that. People forget as well, Web3 enables people, the public, the consumer, to actually take an active engagement and stake with the businesses that are coming to them. So really, instead of thinking it as a profit share, it's more of a marketing spend. But you're gaining more loyal, more engaged, and more attuned to your goals, customers and users. It's a fantastic way to be more inclusive. That's kind of the cultural revolution amongst the tech. Is actually that people stop being just customers and just being consumers, but they're actually part of the business, and they actually want to go and evangelize. And you see it throughout Web3 right now.
Yeah. And I would add that, and again, this is actually an extension of a comment made by Aditya earlier, is that it occurs to me that if the Hollywood Writers Union and the Hollywood producers had adopted tokenization, particularly for sharing revenues, you wouldn't have a Hollywood writers strike at the moment.
True. No, it's very true. I mean, I think this is why I think it's unstoppable, because one way or the other, as I like to say, I mean, I know it sounds a bit maximalist like that, but everything that has the potential to be tokenized will eventually be tokenized. It's just the way I see it.
Yeah, just another point I wanted to add on, the transparency factor that Yong touched upon, and why this is inevitable, as you mentioned, Jean-Luc, is that because these are like public digital ledgers, right? You have historical data of every asset and every user kind of on chain, and the richness of this data allows businesses to better distribute whatever service they're distributing, or like if it's a product, and targeting the right customers, the right people, tapping into the historical value of an asset. So it opens up new distribution channels, added layer of transparency, which I feel is another factor that's going to catalyze adoption here.
Yeah, of course. I mean, obviously that comes with all kind of regulatory and compliance questions, but that's definitely the direction where things are going, for sure. Let's move to the second point. Real world use cases. I love this. Can you please provide examples of industries that are leveraging tokenization to enhance asset management and ownership? Personally, I have to say that I woke up to this in 2020 in relation to this NBA player called Spencer Dinwiddie, who decided against actually the NBA organization to to roll out an Ethereum-based investment vehicle for his own contract, launching his unique bond in early 2020 with and I think it was with Securitize. Obviously, it was very limited. It was only for qualified accredited investors who had to pass various SEC and legal standards, but still. So this is probably my wake up moment on something like that. Tokenization of something that is tangible, that exists in the physical world, that was suddenly accessible on chain. Since then, obviously, the market has made a lot of progress, and I will speak later about another example that we have right now in the diamond industry. But maybe Aditya, would you like to share your experience or your insight on real world use cases?
Yeah, sure. I think we can, take a look at some of the existing projects and protocols that are seeing product market fit in this vertical. The biggest example over here, I guess, would be MakerDAO, which is a DeFi project that's arguably made the most progress in terms of a real world asset adoption.
Mm-hmm.
Our protocol has 680 million worth of real world assets backing their decentralized stablecoin DAI. So DAI is pegged to the US dollar, and it can actually be minted by collateralizing these off-chain real-world assets.
Yep.
So that's definitely one of the interesting use cases. The other one I would
and actually, sorry to interrupt you here, but I find the MakerDAO especially interesting because when you look at the bear market that we have been through, and we are probably still into it, MakerDAO has actually proved to be one of the most resilient ecosystem out there. So
so really bringing real world yields on chain kind of opens up new avenues for monetization and revenue growth, and that's what's been proven by MakerDAO in this case. But happy to hear from my co-panelists as well.
Yeah, Yang, would you like to say something about that?
Well, the real world use cases we're seeing now and that we are dabbling with at the moment include, obviously art, some real estate, some specialized real estate,
Mm-hmm.
and we're also beginning to see areas like carbon, which lends itself, which lends itself very well to tokenization.
Yeah.
Because the carbon credits themselves, as you can imagine, they are to a large extent sort of abstract. So these for us, these are things that we're actually in the middle of dabbling for actual portfolios, and we hope that we'll see a wider range, for instance, a bigger range of commodities, for instance, in particularly in areas such as energy, and also in a wider range of minerals, and you mentioned something interesting, like diamonds or palladium, or or those very, very rare metals that go inside your iPhone, and things like that.
Yeah, absolutely. I mean, diamonds is something that I find quite fascinating, actually. When you think about it, it's the last uncommoditized commodity, and we all know why, because it's very difficult to establish a consistent price for diamonds in widely different cuts and quality, and also because diamond is probably one of the oldest trade in the world, but also one of the most traditionally secretive.
Yes,
So
it's the
obviously,
most oldest but most inefficient market.
Yeah, but actually, I mean, but my point is, now that I kind of work in it with some people, some groups who actually really know this industry very, very well, I realized that the inefficiency of this industry is partly deliberate. Nobody really wants transparency. So obviously, when you come into this with a disruptive view, tokenization, fractionalization, transparency, obviously this is raising a lot of questions. I'm not even talking about the somehow bad reputation of diamonds coming from war torn parts of Africa, etc., etc. But this is where I mean, when we were preparing this panel yesterday, Young, and we were in agreement on the fact that it's interesting to see how real world come back to bite you in the digital world, because eventually the first question, the first point, the first pain point that we have in the diamond world is hold on, where is the index? We don't have an index of a generally universally accepted index about in relation to the value of any diamond. So that's interesting in terms of how we need to always be connecting the tokenization and digital asset dream to actual tangible reality. But it's quite fascinating. Sean, sorry, I haven't asked you what you think about,
about
that.
I mean, actually, I think diamonds are a very good reason as to why things need to come on chain, right? Because for several hundred years, it's been a complete concentration of control over the supply, and who knows how much supply there is. And whilst it's manipulated in terms of what comes out, it's in effect a form of hoarding. And if you think about it, you could even say, okay, not only oil, but maybe when you look at things like oil, there is a little bit of obfuscation of the actual supply, right? So much so that people are, really working on futures, because that's the only thing they can try and ascertain what may or may not be around in the future. They can't really tell you today there's exactly X barrels and that's why the price is this. So I think the world will have a big shakeup because of the transparency. And I think things will become cheaper. And it's not just blockchain tech that will do that. It will be AI tech as well, which is another can of worms. But in terms of real world use of tokenization today, you've got not only the authentication procedures. So flip side of our discussion about gems just now, one of our clients is a sapphire producer. And there is no globally, there's no GSI for the global quality of sapphires. So not only do they want to create one, but they also want to do it on chain. So you've got a really good situation where, in actual fact, going forward, one of the largest mines in the world is going to be etching potentially the serial number into the actual item, which then corresponds directly to the NFT version of it. So then you have a digital twinning situation. That's extremely important for authentication. We see it happening in fashion and brands right now, where they're bringing out somewhat gimmicky NFT versions of their items. The NFT of a Gucci handbag sold for 3 times the cost of the real handbag. And you got to think, why does this happen? And there's this thing, swag, which is quite popular amongst the people who are in the early adoption. They want to show they spend a lot of money on something. The price is available on the ledger, so this guy spent $50,000 on a bag, which is normally, whatever. More people will see you online with that item than when you're walking through the street with it. So there's an amplification of what happens in social media, in metaverse. I know it's not trendy to talk about now, but it's still going to happen. There will be metaverse projects, right? So the exposure that real world assets that you have in a physical digital twin is one of the reasons that adds value to the digital side. Now, in terms of real estate, yes, we're all clearly, it's very common that we're working on that. But there are other elements. Debt tokenization is extremely easy to administer. And particularly if in America you want to do a crowdfunding project and raise something under $5 million, it doesn't come under SEC regulations, it's just simply crowdfunding. To implement that in Web3 in smaller tranches and then go again is very easy to replicate, which kind of negates the validity of any rule against larger amounts of money being raised, right? Because you could just set it up automatically and it happens again and again and again. You can tokenize copyrights. That's already starting to happen in the music industry, and people and us artists will actually have their own ownership of their own IP, and that's already starting to happen.
Yeah.
So you will then see a situation where the middlemen are going to get squeezed out. The labels are going to get squeezed out. You know, sadly, a lot of brokers will get squeezed out. The only way brokers will adapt to these kind of disruptions is by being able to facilitate them for the clients who don't want to learn the new tech. But like anything, eventually everyone will grow up knowing the new tech. And so 50, 60 years time, who knows whether there will be any need for consultants in these things, because Joe Public will just go, I did it on my phone. Oh, sorry, tap a screen in their head. I mean, technology is moving at such an exponential rate. You can't expect it to be what it is today, or even 20 years ago, or 5 years ago. It's just insane that what we're planning and talking about now, we should already be moving, and some of us are, but we should already be doing this. It's not the time to just guess and think maybe next time I'll do it. You've got to do it now, because by the time you do it in 2 or 3 quarters, it's changed again. Sorry.
Yeah.
I get in preach mode.
I love it. Keep preaching. Let's talk about the regulatory landscape, guys. Maybe this is like the back to reality moment. The regulatory landscape. I mean, Sean, you're in Indonesia, for example. What are the regulatory considerations for investors, for asset managers to be aware of when dealing or trying to deal with digital assets? I mean, we all know about, I mean, I'm not by any means specializing into specialist of the regulatory landscape in Indonesia, but I know by people I know that it's far from simple. So how do you see those two things coming together for the benefits of investors and asset managers?
Well, that is where the intermediary and the expert in the industry has to come into place, right? So the company is started in Singapore, headquartered in BVI, looking for the most friendly crypto regulations. We got a Dubai license in application and a Hong Kong license in application. The world is global. It doesn't really matter about individual regulations. And in fact, individual regulations are going to change to account for global situations. In Indonesia, you can't transact outside of IDR. Simple as that, if you're advertising domestically. But if the transaction is occurring in the ether, in the metaverse, then whose jurisdiction are you really in? This is why metaverse is going to be a very important place. If you are in a decentralized server and the server doesn't sit in any one nation, okay, and the transactions are carried out in that virtual realm, who is taxing you there? Nobody. Who is regulating you there? Nobody. Because you're in a non-existent virtual realm. There is no government there. There is no one that could reach into that. And if you're dealing
are you talking to the regulators in Indonesia?
We only sell property in Indonesia. We don't do it in Indonesia. We do it from a Singaporean-based entity.
All right. Okay.
Yeah.
No,
I have my own
about how they see that on their side.
So in Indonesia, they see digital assets as commodities, okay, and they don't see them as currencies. Mm-hmm. And you must, in order to invest as a foreign national, you must have a PTPMA foreign investment vehicle. You must invest $1 billion, $1 billion IDR, already did that for my own personal hotel project. Having said that, for a new person to come in, that's okay. You can navigate it. It's much easier than it used to be. 8 years of Jokowi has been very beneficial to everybody, and I do strongly recommend people look at Indonesia as a growing environment. But it's very important to get decent legal advice. You know? A lot of the preceding foreign investment in Indonesia was very much like Australian holiday makers doing crazy illegal structures by just giving a local surf guy $50,000 and saying, buy me a property. This is not the way to do business. Nobody in this call is ever going to do that kind of stuff, right? But there was a huge amount of foreign investment into Indonesia in that manner. It's not the way to do business. You've got to do it through the corporate way. But no, in terms of the digital assets, the key is to find the most beneficial realms and then domicile there. And then you can work as freely as you wish, right? The only things you can't do is deal with your old-fashioned sanctioned nations, and you don't want to be dealing with the US nationals at the moment. Right? It's okay. It's fine. There's plenty of the rest of the world to deal with.
The world is big enough. Young, Aditya?
Well, yeah. I'm also sitting in Singapore, and this is an interesting place in the sense that it's actually quite open to digital assets. And in fact, one interesting thing is that the largest institutional exchange is actually run by DBS Bank, in fact.
Yep.
So there's a two-tier market here, is that you cannot solicit to the retail public, but so it's a fairly flexible and inviting market if you are what they call a institutional or a qualified investor, and with a fair degree of flexibility and openness. But when it comes to retail investors, then it's a whole different game, and that's why that even industry giants like Binance actually tried very hard to open a foothold here, but they ended up, giving up and moving to Dubai. So it's and I think and obviously as Sean mentioned, you don't even want to go near the U.S. or U.S. investors. That's like just too much of a headache. So, but there's enough to do, and I mean, as you know, more than 70% of crypto trading is outside of the United States, anyways. So,
yeah, absolutely, and I have to say, I mean, the families we deal with or we work with in this part of the world, or even in Europe, actually agree that they are just not interested, at least not with us, to go anywhere near the US market anyway. So everything is always ex US for obvious reasons, and it's not even about the regulation. It's about the uncertainty.
Yes.
Of the US market.
Yeah, but interestingly enough, that's not only for the crypto, but it's a similar situation even in just plain vanilla venture capital or private equity. When traditional venture capital, private equity invite investors, they generally do not mix U.S. investors into international investors.
Yeah.
So that's a whole different ball game. But at any rate, I think from a regulatory perspective, I mean, it's all linked into what's going to happen, to democratize, and what are the ground rules that will allow more ease of access for retail investors, and I think that's the sort of the big question going forward, because that's where the regulation is required from major markets going forward, and from what I can see, is like sort of what I would call representative markets like the United States, UK, or are all sitting on the fence at the moment. Just looking over the shoulder, seeing, trying to see, who's who's going to, make the first move in terms of regulation, and it still boils down to this fundamental issue, as Sean mentioned. Is are they going to define this as a financial asset or as a commodity? And many countries have not reached a definitive conclusion yet as to how they're going to classify digital assets. Because of the legal jurisdiction problem, and also the liability, and how they're going to write the law in terms of damages and all sorts of things like that.
And also because of the never-ending, relentless innovation that comes from the industry. So I mean, think about it for a second. If you're a regulator anywhere in the world, I mean, you're just not used to that. I mean, every day there's something new coming up on the market. There is a new kind of products. You don't even know exactly what that is, how to legally characterize it. Who are the investors? Who are the typology of, what is the typology of clients? Is it suitable for retail? Is it suitable only for professional or qualified investors? Is it even a collective investment vehicle? I mean, it's not that easy. I mean, when you have people like Sean, who always come every other day with something completely disruptive, I mean, you get crazy. I mean, I can imagine for those guys.
Well, I know you have a legal background, Jean-Luc, right? Okay.
Yes.
And I also studied law. So look, when you were studying the law, you're not studying to reply by rote what already exists. You're looking for what is missing and what is not covered and what the language is not correct about. That is the skill of being a legal professional. And to be honest, what you're doing when you're looking at regulatory frameworks is also looking at how do you navigate that maze. And technology is giving us another way to navigate the maze. And the language of law hasn't caught up yet. And regulation isn't there to protect investors, despite what they say. We all know it's there to protect the people who are already in a solid position of power. Otherwise, they wouldn't be consulting with people like SBF, who is the biggest Ponzi merchant criminal of all. We can say that. He's doing jail time. And he's the guy who was advising the US Senate Committee on regulatory positions. So come on, let's face it, right? Yeah. What we are doing, the best way we can serve our clients, the best way we can do anything is educate them. And people are coming to the point where this is going to be the age of enlightenment again, where the customer is actually really king. Well, I don't even think there should be accredited investors, quite frankly. I mean, obviously, the size of your investment is proportionate to your capability. But, as we go forward into true democratization of finance, if everything is transparent, why can you not trust a guy who has less money to make a decision, who's probably more cautious with what minimal funds that he has about what he's going to do with it? No, I speak to, living in Indonesia, I speak to people from an image who still, from a village, who their investment plan is buy gold and stick it under the mattress. And they've been doing it for generations. And I tell you what, they're actually in a pretty solid position because of this. So, do not underestimate the power of people who are low income. Do not underestimate the intellectual power of people who are not so-called accredited investors. And that's, again, a preachy thing. But, Joe Public around the world, there's a lot of smart people who don't have a lot of money. Money is not the metric for people's ability to make decisions. It's intellect. And that varies widely from person to person, regardless of money.
Agree. Let's move on the fourth point, because time is running out. Portfolio diversification. How can traditional investors effectively incorporate digital assets into their portfolio? Let me start with you, Aditya.
Yeah. So from an investor's perspective, right? Like, firstly, I feel that no fund or family office should have zero exposure to this vertical, as kind of provides like an asymmetric risk reward opportunity. But at the same time, investors should manage their risk when including this as a part of their portfolio. So for us, we typically, advise that a maximum allocation of maybe 5%, but ideally 2 to 3% would kind of make sense for investors. And as for
You mean
they
5% of their net investable assets?
net investable, if that is the risk appetite, that would be like the maximum, but not beyond that, because
Okay.
you have to manage risk at the same time. But zero is also like not at all advised by us. So something in the
Okay.
middle would be like 2 to 3%. And the risk reward, I mean, I won't get into the numbers really, but we really feel that that's super asymmetric at the current stage. If you go through research reports that Boston Consulting Group has released and BlackRock has talked about, this is probably a multi-trillion-dollar opportunity in the next few years, and it is an important part of the portfolio as well.
Yeah.
How investors might get exposure, I would say, so that would be through crypto exchanges, both centralized and decentralized at the moment. And they can either purchase tokens of projects that have seen some product market fit and are taking a proactive approach to navigating regulations. That's a key part of the due diligence when looking for exposure out here. It would also be kind of useful to identify a way to express an index bet on this space and put some money there. Typically, index bets are certain layers of infrastructure. So we know that there's a couple of projects trying to solve the interoperability problem, which would also be key for real world assets. So that's an interesting infrastructure play, in our opinion. But yeah, these are a couple of ways that investors might get exposure.
Yeah, I mean, one thing that I find remarkable when it comes to real world assets is a growth of the protocols that are specifically dedicated to that. And I mean, when you look at the likes of Centrifuge and Maple and Goldfinch and TrueFi and Clearpool and all those guys, I mean, the number of I was looking at this morning, the number of RWA holder addresses on any of the RWA token is increasing. It's quite remarkable. We are now close to 4,000 addresses. So it's not a small thing anymore. If you only consider the amount of loans, it's close to $5 billion on in loans. So that's pretty large. An ecosystem like MakerDAO, we were talking about it earlier, is quite incredible. You can now include collateral in the form of tokenized real estate, invoices, account receivables, in addition to issuing the stablecoin DAI. So it's part of a movement, and it's becoming more and more accessible, more and more easy to understand for everybody. And I find this very, very interesting, because that will be a good way for people, even the more skeptical person, to actually try. I mean, you can try opening an account on Goldfinch. If you are based in if you are an emerging market based business, you can finally have access to uncollateralized borrowing or lending protocols that allows you to access capital like never ever before. So that I find very, very interesting, and those things will just keep growing. Sean, you want to say something?
No. I just I'm literally I have to get off in about 30 seconds or so. So
okay. All right. Okay.
Can I just say that it's been really exciting though to hear Yong and Aditya and your comments, and shame that we couldn't speak to Garland because he's in transit. I just think that the final point I'll make as a takeaway is that this is all happening regardless of whether you want to do it or not. I mean, technology is not going to wait for anybody. So
Absolutely.
it's really a question of, do you want to actually be there in amongst it or not? And if you do, then this is the kind of summit you need to start with, but you need to be like on it for the rest of the next week or two, learning and getting up to speed, and then looking for sources to put stuff out. On Fleeman, we've got $600 million of real estate. We've got pushing 400 million of DeFi projects to put out over the next 12 months. There are plenty of options to do DeFi. I tell you another thing to look at, which I found recently, was Arcade.xyz. They actually work with a partner to do real world assets collateralization. Literally, you could drop a watch into an assayer, and then they will then convert that into a tokenized debt. It is insane what is capable and what is possible right now.
And it's just the beginning.
Thanks for your time, everybody. Yeah.
All right. Before you leave, I have one last question. 30 seconds, and I will start with you, Sean, because I know you have to go. If we were to have the same conversation in 2 years from now, where do you think this industry will be? Let's make a little bit of futurology here. In 2 years from now.
Yeah, well, this is my thing, so I could talk for an hour on it. I mean, literally, we won't be having it here. We'll be having it in person in a metaverse thing. We'll all be plugged directly into the matrix, and it'll be so all pervasive that literally you wouldn't be having this discussion because you're already doing it. You'll be cashing things in from your retina, from your chip in your hand, all that kind of stuff. It's going to happen, right? It's happening so fast. Our children will not recognize the archaic world that we live in compared to people who were, shipping cotton bags in a horse and cart like 100 years ago. It's insane.
What took us so long, right?
Yeah, exactly. They were just like, what's going on? These ancient people and their stupid webcams. I mean, literally, it's going to be different. Thanks.
All right.
Sorry, I can't listen to the rest.
Thank you very much. Young, 2 years from now, how do you see the industry? How do you see this entire discussion being?
Well, I'm quite confident that we're going to see at least half of the stuff that we mentioned, tokenized, and also, I wouldn't be surprised if the way we do investments is all going to be on the metaverse.
Okay. All right. Aditya?
Yeah. So I really look forward to seeing, Sean's vision, but I'm slightly less optimistic. Optimistic nonetheless. But yeah, so my view is that I think we'll see crypto institutionalization significantly progress over the next 2 years. I think the filing of the BlackRock ETF is kind of the first sign of that, and approval of an ETF would be a major catalyst that could open the floodgates to for institutional capital into this vertical. Then I see that infrastructure would be much more integrated and smooth. I don't think we're 100% there yet. All the building blocks are being put in place, but in 2 years, I think we should pretty much be there. Given all of this and the fact that we're increasingly living in a digital world, more and more people see the overall opportunity here. I'm still expecting this vertical to grow, very rapidly to at least a multi-billion-dollar market in the next couple of years. Yeah.
Couldn't agree more. All right. Thank you very much. I think that was a very instructive, educational, and fun conversation, just the way we wanted it to be. Thank you so much for your time. I hope you enjoyed that discussion as much as I enjoyed it with you guys. And Curtis, back to you. Thank you for your time.
Thank you.
Thanks, Jean-Luc. Thanks, Jan.
Thank you.
Thanks.